Welcome to Killik & Co podcast. It's September the 30th, and that means it's the last day of the third quarter. We have started with quite a weak opening to markets this morning. A combination of events over the weekend have led to some volatility in equities. First of all, there was a surprise vote in the House of Representatives over the weekend, which is pushing a deadline or a vote quite close to the deadline. The vote comes down to the ability of the US central government to be able to pay its bills. It gives them a short-term extension of a further 10 weeks for the payment of the bills. But by including the Obamacare clause into the discussion between the Republicans and the Democrats, has imposed what looks to be quite a fraught last-minute exercise to try and resolve these different decisions at the moment. Of course, if they can't resolve the issue, then the US central government goes into what is known as a shutdown. The last time this happened was in 95, 96 under Bill Clinton. And during that time, interest rates rose and central government workers have not been paid. Some of the shorter-term ramifications is, for example, the non-farm payroll report, which is due out on Friday this week, won't be published if the government does go into shutdown. So the markets at the moment are still taking what I'd say is a relatively relaxed view about all of this. I think if they genuinely thought something wouldn't have happened today, or indeed over the course of the next day or two, then markets may have been shaken a little bit harder than they are proving to be. But it does mean that attention is going to be sort of closely watched whether they can resolve this issue later today. The other issue, of course, is in Italy. Over the weekend, Berlusconi recommended to 5 of his MPs that they resign from government at the weekend. The coalition in Italy has clearly been a very difficult coalition with really two opposite sides of the track coming together to form this government. It means that there will be a vote of confidence on Wednesday of this week in the new Prime Minister. As a result of that, Italian bond yields have risen this morning, and Italian stock markets are down around 2 to 2.5%. So a number of issues that are of a more political nature, which are just disturbing and creating a little bit of volatility. So a quick look at the diary for what is the planned week ahead, assuming that some of these issues can be overcome, and really just focus on the US to later in the course of this week that we have these, as I say, US non-farm payroll numbers, which are the critical number for the tapering. And in Europe, just to mention that on Wednesday, a day earlier than planned, the ECB rate decision is due out. We also have some other PMI data coming out in the course of Europe and the UK. So just turning to what is happening on markets, I mentioned Italy, and really just to sort of take a look at the spike that we have seen towards the close of play, or the opening of play today, with a spike up to 4.53%. So it's a sort of fairly decent spike, but one which, as I say, I think with the noise that has been emanating from Mr. Berlusconi's corner, I think markets will take a view that that's more typical of him. The vote of confidence is obviously going to be the key determinant of the direction of Italian markets, and that takes place Wednesday of this week. In terms of the US, well, again, we have seen yields continue to drop. This was ever since the Fed decided not to taper in September, and really the market's still trying to establish a sensible time frame for when tapering will now begin. And I've seen sort of a range between December of this year moving out until the end of the first quarter for 2014. Now seems to be the new plan. But this week's non-farm payroll data, as I say, could be a reasonable determinant of whether that should be at the sort of front end of that particular estimate or the back end. So keep an eye on that market. So for the FTSE, well, we have seen quite a retracement now from the 6,600 level. You can see there, market has formed a little bit of resistance around 6,600. It shied away from that level twice now. In fact, it was trading quite close to 6,600 just Friday morning, and this morning we're already back down to sort of 6,450 at the moment. So really churning into a sort of reasonably tight range at the moment, and as you can see there, some important levels at 6,400 and 6,600, and I suspect that the way that the talk in the US goes over the course of the next 24 hours will be a determinant as to whether or not we're going to break out of that range one way or t'other. In terms of some stocks, I want to mention some that were hit towards the end of last week. Centrica, as we can see, did actually take quite a beating from that Ed Miliband speech where he referred to a cap on energy prices. It had all the hallmarks of a bit of legislation that is going to be quite tough to work its way through, but nevertheless just the pure sentiment that that government is looking at energy costs as a way of trying to control the cost of living and doing it through the energy market has actually taken its toll on some of the energy markets. So we still have Centrica on our buy list, and we're taking a look of the potential impact there. But Centrica well supported by one of those sort of decent dividend yields. So as I say, it may well be an opportunity to take a look at a good entry point for that stock. Other stocks that we were highlighting last week, we continue to like Boeing. Really the main thrust here is the significant increase we're seeing globally in airline travel and therefore demand for new planes. The return on capital that the airline groups are getting out of the newer models means that the replenishment cycle is helping the likes of Boeing at the moment, and you can see that chart clearly reflecting this news, but one which we still think has further upside to go. And we were pleased also with the note we recently produced on healthy living. We highlighted Nike Group as one of our preferred choices in that sector. I think it's worth observing that the sportswear market is growing, but within that, the market share that Nike is taking off the likes of Adidas is reflected in the quarterly growth of 8 to 10%, whereas Adidas has really been looking at flat growth over the last 2 to 3 quarters. New technology, new fabric technology and greater marketing, I think, is spurring Nike at the moment to a good level of reasonable outperformance in the near term. Just a final comment on commodities. We have seen in the last few sort of sessions of September that the oil price has begun to shy away. We're clearly seeing tensions ease somewhat in the Syrian situation, and obviously Obama discussing tactics with the Iranian leader. A surprise move has also added to taking just some premium out of the oil market at the moment. That's a helpful situation. It is a stimulant to world economic growth, and it's interesting to observe that coming off around 10% during the full course of the last sort of second half of September.